They're going to scare you with talk about stagflation, low growth but high inflation. Yeah, some places are going to have that for a while, but it's a temporary situation of the prices being pushed up this year, and I expect inflation to be a lot lower next year. Well, hello again, everybody. Today I just wanted to cover off a couple of things. One is the general outlook for the New Zealand economy. Obviously, people are thinking a lot about that with inflation popping up, interest rates rising, tumultuous events overseas. But before that, I want to have a look at something that's going to appear in the media a bit more as the year goes by, as the rate of inflation goes higher towards 7, maybe 7.5%, but also as we get further evidence of house prices falling, and all up, maybe they're going to fall about 10% or so back to where they were in those horrible days of June of last year. And the media are going to refer a bit to the 1970s. And what the focus will be on there is the fact that house prices did not actually fall in the 1970s, but inflation averaged almost 13% a year from exactly 1970 through to 1987. So the general rise in prices was holding the house prices up. And if you actually adjusted the house prices for the general increase in the cost of living, in real terms, adjusting for inflation, everything else going up in price, house prices did actually fall by quite a bit. In fact, about 40% between the end of 1974 and 1980. Pretty much sort of the worst time for the New Zealand economy. And we were hit by a great number of things back then, which we are not being hit by this time around. So I'm mentioning this because there will be these stories coming out, I think, later this year, trying to scare the bejeebus out of a few people. And of course, back then we saw a quadrupling, 4 times increase in oil prices internationally over 1973-74, and then another big increase over 1977-78, the Iranian Revolution time back then. We also saw the New Zealand economy being very sort of rigid, regulated, a lot of people getting sick of that and leaving the country. We had a big net migration loss of about 156,000 people from 1975 through to 1982, and a contributing factor there was the United Kingdom entering the common market, the EEC, back from January 1973, and so our farmers lost a lot of market for their goods. We're not looking at that same situation this time around. So just, some people are going to try and scare you, but this is not the 1970s. They're going to scare you with talk about stagflation, low growth but high inflation. Yeah, some places are going to have that for a while, but it's a temporary situation of the prices being pushed up this year, and I expect inflation to be a lot lower next year. And in terms of those things supporting our economy, the negatives are mainly in the ascendancy at the moment: the rising cost of living, oil prices, etc. The interest rates are going up, house prices doing a correction from unsustainably high levels, the international borders opening up, so you and I increasing spending on overseas rather than here domestically. I also expect to see a decent net migration outflow to Australia in particular, but we have very good support for our primary sector, the fishing, the forestry, pastoral activities in particular, from very high commodity prices overseas. We will eventually get some more tourists coming into New Zealand. Personally, I think that's more a story for 2023 than this year. Probably a few Aussies coming across, definitely for the skiing in winter. A few other things there, lots of stuff to be built in New Zealand, so infrastructure, construction spending more generally. Job security is very high in New Zealand. That is of prime importance when it comes to support for the housing market. People paying off their mortgages, still out there looking for houses, etc. And 2 other things, businesses have a lot of catch-up capital spending to do, especially to boost their productivity because they can't find staff, so they need to make their existing people more efficient. And I do tend to think that the way the polls are going, the government is going to open up the spigots a little bit, not so much in this year's budget, although they've already allocated an extra $6 billion spending there in late May. But I think in next year's May budget, pre-election, we're probably going to see a decent amount of spending sloshed around the place there. So interesting times, but my main message is watch for some sensationalist media articles later this year about what happened in the 1970s. This is not the 1970s, certainly when it comes to clothing and hairstyles, except maybe apparently sometimes this. All the best.